All right. Back to work tonight, guys and gals. Hope y'all had a fantastic day out there. Hope the hump day went well for you. But it's time to get back to work. It's Wednesday evening after all, January the 6th, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with us because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the Eminis, we got the oil, and we got the gold on our radar for tomorrow. Speaking of tomorrow, got some news we got to be watching for tomorrow morning, and of course, some more very volatile markets today, which are setting up for some great opportunities for tomorrow. Before we jump in, though, and get this party started tonight, though, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We post this nightly newsletter every evening, right around 7 o'clock Eastern Time, with the best trade ideas for the following day. So make sure you subscribe so you don't miss the next one. And don't forget, if you have any questions for me tonight, any questions, drop those questions for me in the comment section. I'll get them answered as soon as possible. And you know, I always enjoy making this video for you guys. If you enjoy this video as much as I enjoy making it, I always appreciate you guys supporting this channel by hitting that thumbs up button for me here tonight on the video. So make sure you subscribe, drop those questions if you got them, and thumbs up if you guys enjoy the content here on this nightly newsletter. But enough of the introduction, though. Let's get these charts going, and let's take a look at what's happening for Thursday's trading session. Now, of course, boy, where do I begin? There's so much for us to cover here. Had, of course, that big move up on the S&P today, right? But if it looks to me like these bears have their hooks into this thing right now. Now, there's a big move higher, obviously, so we got some objectives to go back up to retest the high. But I'll tell you, I would love to see if we can get these buyers to get trapped up here and get short off the highs. It's a bull market right now, but I'll tell you, the bears do look pretty good, and that's the best risk-reward trade for tomorrow. I'm going to go into more details, obviously, tonight on how to buy it, but more importantly, how to short off this high, because that range still acting like a magnet down there. We'll talk about the S&P, of course, in a lot of detail in tonight's video. As you can see over on the oil, right in the middle, oil is a big old range, right? Range-bound markets, of course, are balanced markets. We're going to buy low at support below the range. We're going to sell high at resistance above the range. We're going to focus on failure patterns, right? So we'll talk about the best places to look to get short, the best places to be a buyer, where to be sitting on hands. And as you can see on the kind of the preview here, we've got a big red flag, and that is a failed rotation. Now, that failed rotation is a very bullish clue here going forward. We had that, of course, the OPEC meeting going on this week. We'll go into more details on this, but that failed rotation is a big clue to tell us if I want to get short off the highs. You know, we talked about this important 51.22 level last night. If I want to get short off the highs, that failed rotation is a big clue to tell me which entry pattern will work best for tomorrow. So we'll definitely dive into that tonight. And then how about that gold? Gold is a classic situation we see a lot in our trade room. We're bearish on gold, right? We talked about that short off the high in last night's newsletter. Well, yeah, those bears definitely got their hooks into it. We didn't quite get the weekend gap filled. I guess I got to work on my numbers here going forward. But all kidding aside, though, you'll notice we got an overshoot there. There's a big overshoot clue on the chart tonight. So that overshoot tells us that if I want to get short for another leg lower tomorrow, I got to be careful because of the overshoot. That overshoot is the biggest clue on the gold chart. I would love to get short on gold for tomorrow. I've still got that gap. I get a range down here I'm watching, so I'm really looking forward to a good day on gold tomorrow, but I got to be careful with that overshoot. So the charts are all prepped up. S&P looks good. Oil looks good. Gold really looks good for tomorrow. Before we jump in, though, I just want to make sure to remind you guys of the news we have coming out tomorrow. And I say this because we got a bunch of news tomorrow morning, right? Don't don't forget, we got the jobless claims report at 8:30 Eastern time. Boy, they got killed today from that ADP employment number, right? And what was it, negative 175 on the ADP employment? So this could be a bloody number tomorrow, that jobless claims report at 8:30. That will be something you definitely want to be watching for tomorrow. Now, don't forget, we're not going to trade the news. We're going to trade the reaction to that news. But I'll tell you, if the ADP employment report from today has anything to do with that jobless claims report tomorrow, we might see some very active reactions going into that 8:45 to 9 o'clock block. And then don't forget, arguably the biggest news of the session tomorrow, ISM, baby. Anytime we see the ISM, the PMIs, right? We always know those are big market moving events. So we do want to see. I would say if you could only be at your desk for a few moments tomorrow, I really like that kind of 8:30 to 10:15, you know what I mean? That block right there looks really ripe for some nice moves on the charts tomorrow. Jobless claims should get us started, but you definitely want to be around. You know, I'll tell you, it could be a pretty good day tomorrow. That 8:30 jobless claims and then 10 o'clock to 10:30 for the reaction to the ISM Services Index could really be some great setups for us tomorrow morning in our trade room. And, you know, speaking of trade room, don't forget, we're going to be in our trade room tomorrow morning at 8 o'clock Eastern time. I'd love to have you there, right there with me. You can get registered and join us every morning, 8 o'clock Eastern time. You got to be a member. I'll put a link in the description of this YouTube video. Grab that link and get registered if you want to come out and trade it with me tomorrow morning at the opening bell. And then don't forget, guys, tomorrow afternoon is kind of the lockout period ahead of that employment number on Friday. Remember, don't forget, big lot traders, they'll be staying out of the markets on Thursday afternoon because we've got the first Friday of the month coming on Friday. We'll talk about that more tomorrow night, obviously, as we get ready for non-farm payrolls on the first Friday of the new year. But now you guys know what the news looks like for tomorrow's trading session. And don't be late because you got that jobless claims report at 8:30 Eastern time. All right, we got the S&P, we got some oil, and we got some gold. Why don't we jump first here into the E-mini, one of my favorite markets right now. What's the key takeaway right now on the E-mini S&P? We started the day off back down into that trading range, pretty much the same range that we talked about in last night's newsletter. Market opened up at 9:30 and just got lit up, right? Strong move going higher. And of course, they went all the way back up to that 73 and a quarter, right? That big top that we talked about in last night's newsletter. So buyers definitely have that nice strong push. And remember, anytime we see a strong move in one direction like this, we know we're probably going to get a pullback and a retest of the high. Now, look what happened though. During that pullback, you see what this is? Look at the sellers jumping off the moving average right there. That's a giveaway. It's a big giveaway. It's a big clue because what do we call these? We call these 1, 2, 3 reversal patterns. And then what do we do with those? We mark up the lows, we mark up the highs, right? And we sell off the highs. You can definitely see the bears, like I said earlier, the bears, they definitely have their hooks in this market right now. There's no doubt about that. But, you know, I think the big challenge right now is we got these buyers that there's a big bullseye. There is a big bullseye right back up to that 73 and a quarter area. So I've got to respect the buyers. There's an easy, it's difficult to look at this chart and not think, oh my goodness, they're going to try to make a run up for those retests of the highs. But, you know, as I said earlier, I think this 1, 2, 3 reversal, right, is one of the most important clues here because now the bears, technically, they've got control of this market. So the bears are going to be looking to nibble on this for a move potentially back down to that trading range where we came from right here today. So what I'd like to do is if I had it my way tomorrow, I'd like to get up into this resistance area overhead. I'd like to try to get these buyers to try to make a run for it up here. Now, there's not much. Here's the interesting part. There's not much you can do to be a buyer right now, right? Unless you're buying down here Are you really going to buy breakouts going higher here? Probably not, right? Probably not, because if I get long up here, my risk is here, my reward is here, right? I mean, unless you're straight gambling on this stuff right now, that risk reward ratio is not very good. Most professional traders are not going to take a bite out of that apple, right? They're not going to want to get anywhere near that. So we assume there'll likely be a lot of speculators, a lot of probably inexperienced traders, right, trying to get caught up there and get in. Now, I'm not saying we can't find a way in here going higher. I'm just saying this is a very unattractive situation to be a buyer. It just really is. The sellers have a lot of the control right now, and you can see here I've got some swings overhead. I've got my channel low drawn, my channel high here. These are usually great spots to get short. The only problem is we've got those bulls, right? The bulls are kind of the elephant in the room, if you will, right? They're going to try to run this thing higher. So if I head up my way tomorrow, I'd love to get us up, right? Up inside that battle zone. The key here is up into resistance. I'd love to see some buyers come in, right? Commit on that pullback and give us a chance here to sell into stop losses, sell the pullback, right? On the way over and try to get a retest of that low for an easy target. And then maybe we get lucky, leave a runner, right? And run back down to that range magnet there. So I would call this a buyer failure setup off the high into a bearish pullback setup as we go. Now, what if we do end up going back up to retest those highs? If we get back up to retest these highs, that pretty much puts a stamp of approval for the buyers on it. It doesn't mean I can't sell it still, though. I will definitely still be looking for a short off that high because, again, there isn't much opportunity that's worth trading up there to get long. I understand we're very bullish right now, but trading is all about probabilities. And right now, the probabilities are not very good on this because of that risk-reward ratio, right, that I talked about earlier. So if we do go back up to retest the high, unless this thing can hold and keep on ripping higher here, possibly up to another big round number up there, but the reality is I'm still going to look for a short off of this high. The problem will be, though, for me to get short off the high, I'm going to need to use a reversal pattern, basically. And the pattern of my choice on this one will be what we call a crown reversal. Now, crown reversals are pretty simple patterns, but you want to pay attention here. The buyers will pull back. They'll try once. They'll pull back again. They'll try twice. And what you ideally want is you want to trap above that high, right? Now, the key here is, right, this one's going to be if we really push up into those highs and looking to pick those pockets of those buyers, right? So we go up, we retest the highs. That, of course, is major resistance. We assume buyers are taking profit up there, and we can look for buyers try once, nope, try again, and then we can short into those stop losses. The target for this one, for the short, is back down to retest the low. See, now that's a risk-reward trade I can get involved with, right? See in this one? The risk on this one is very small compared to the reward. Those are very attractive trades. I realize it's going against the overall trend, but remember, traders are all about risk, reward, and probabilities. When there's a big risk for a small reward, you're not going to get a lot of people excited. The probabilities go down. When there's a lot of reward for a small amount of risk, like in this short off the high, probabilities go way up here, especially when that will complete the objective of retesting those highs. So a crown reversal, right? A crown reversal pattern off of those highs. You know, I'll tell you guys, reversal patterns are really tricky. You have to make sure that you're taking them in the right location. And as I always tell my clients, crown reversals usually take 3 times longer than you think they will, right? We want to avoid micro examples of these and really wait for that one, that two. You know what? I cover a lot more detail of those crown reversal patterns along with all of my favorite entry patterns in our free trading course. And what I'll do is I'll put a link up here in the upper right hand corner for you grab that little pop-up there that comes up there in the upper right-hand corner and grab our free trading classes here at School of Trade, because part of the free course, you'll learn more about our favorite entry patterns. You'll learn about that crown reversal pattern, all my favorite reversal patterns, by the way, right? Not just the crown. You'll also learn my 3-step strategy, and I'll send you hundreds of examples of how we use that strategy, right, every day in our trade room. So make sure you grab that link popped up there in the upper right-hand corner. That way you can really master these setups, because obviously I'm just drawing on the screen right now, but I want you to get a much deeper dive right into these patterns. So now we kind of know what my ideal scenario here would be as the market goes higher. Now you might be wondering here, well, what if, how would I buy it? How could I buy this market right now? The hardest part right now is I can't buy it as it's going higher, right? I'm going to have to see like a breakout pattern, basically. Think of this as a major resistance level. We're going to have to get up into this area of resistance. We're going to need those buyers to hold this and really blast, right? We're going to need to see a very strong move, basically confirming that these buyers have control and they want more. And you could easily see this could turn into one big measured move, right? ABCD target overhead. So think about that, where we might be going next here. But again, I can't get long into those highs here. That pullback up there is a disaster waiting to happen, right? You might get a little bit out of it before it tumbles back down again. But if I can get this straw move higher here, if I can get this pullback, and if they can hold that pullback and jump, what do we call those? We call those 1, 2, 3 reversals, right? Just like this one. 1, 2, 3 reversal. What do we do there? We mark up the lows. We draw the channel backwards, right? And we short off the high, right? Same thing that we see here. We can do it on the way higher too. Mark up that high, mark up that low, find that hidden channel, right? And we can get long off of the low. So we gotta get some sort of breakout, right? Going higher here. The only other way that you could really kind of thread the needle up there would be if you saw a real strong move up, right? A relatively shallow pullback and some sort of trap. I'm telling you right now, though, this is going to be one of the most difficult entries to get into up there. You're going to have to get a trap up there because you're going to need, again, to balance your risk, right? Small amount of risk. You're going to have to get as low as you can go. It's going to be really tricky to get long up there at those highs. So as we try to go higher, I'm going to resist the temptation to buy high. I'll wait for a breakout pattern, like a 1, 2, 3 breakout pattern, and make it look for that market running one more leg higher. Now, we may also get stuck inside this range. That's a definite possibility if we get stuck inside the range, and this could also go lower and get back into a range. But if we end up sitting inside this range right now, just remember, anytime we have a range-bound market that is bearish before we go into the range, what's our job? Our job is to find resistance levels overhead and then just focus on failures. Wait to get the pop up, wait to get the buyers to commit on the breakout pullback, and just focus on, or as I always say in our trade room, anticipate where those buyers are going to have their stop losses and just use a failure pattern to sell right into those stop losses. Those failure patterns are my bread and butter when it comes to a range bound market, right? Now, of course, if I'm wrong and we don't get that bump up and over here, if the market just runs lower, how could I trade it as it goes lower? There are two very simple patterns I'll be looking for as we go lower. The one that is probably most likely is a 2-try trap. Let's just say, for example, that we just make a strong run going lower here. If the market takes off to the downside, watch out for a shallow pullback, a lower low in price, and a trap right above that high. Strong move down, shallow pullback, barely touches the moving average, lower low in price, trap high, right? Great looking setup. The range below us, of course, is the magnet. That's the target. Or we may also see that classic 1, 2, 3 breakdown, right? So strong move lower, holds the pullback off the moving average, jumps off the EMA. I'll swoop in, grab a trend line there, grab my trend line overhead, and look for the short there, right? I always want to get short as high as I can get, right? That's why I don't like to chase the market either higher or lower. I'm going to look for, again, what we call a 1, 2, 3 breakdown, and we'll look for that short off the high of that channel, right? Now, obviously, again, I'm just simply marking up the charts tomorrow or tonight. Again, if you want to get a much deeper dive into all of my favorite patterns, right, we'll go into a lot more detail in that free course linked up in the upper right-hand corner. Or grab that link I put in the video. Grab that link and get registered, right, as a member of our trade room and come out and do it with me tomorrow, right? It's much easier to do it when you're doing it right there along with me. So very, very impressive run here for the buyers today on the E-mini, but their time might be numbered. But hey, at the same time, though, a lot going on right now, a lot of news tomorrow. We will see what we get. Either way, we're ready for the action. Should we go to the crude oil? I like the idea of going to crude next. Let's take a look at the black gold here, right? The Texas T, the crude oil futures. What do we got going on for oil? Now, don't forget, going on in the background right now, OPEC is back and forth on this production cut, right? There's been a lot of concessions made the last couple days, which is probably what's keeping this market propped up right now, right? A relatively significant production cut from, I believe it was Saudi Arabia, was announced earlier this morning. And you can definitely see buyers like that because of that failed rotation at the low. What's the key takeaway right now on the oil? The key takeaway is we, of course, are bullish, right? Coming out of yesterday's trading session into a trading range. Now, what is a trading range? Trading ranges are balanced markets, right? So what goes up comes down, what goes down comes up. And what do you do with a range-bound market? You find support levels below, you find resistance levels above, right? We buy low at support, we sell high at resistance, buy low at support, sell high at resistance. And what's the pattern? What's the setup of choice? A failure pattern, right? That's the trick. So whenever you have a range, right, whether it's a bull range or a bear range or a neutral range, whenever you got a range, find a level of resistance overhead, find a level of support below, wait for that. For example, wait for it to pop up into resistance, right? Wait for the breakout pullback. I used to love breakout pullbacks when I was a new trader, but I learned that lesson the hard way. Most of them are going to fail and will sell back down in. We're ultimately looking to basically sell into stop losses, right, of those buyers when they try to buy that pullback. I don't try to pick the top, right? Picking tops and bottoms it's a rookie game, right? It's a rookie game. It's unreliable. Remember, trading's all about probabilities, and trying to pick tops and bottoms, it's so much easier to wait for the pop up, wait for the buyers and sell back down to them. Same thing down, right? They run lower. We look for those bears to come in, get short off the pullback, and we can, of course, buy into those stop losses, right? I'm not trying to pick the bottom down here. I'm simply waiting for those bears to commit on the pullback. That tells me exactly where their stops are. Yeah, it's not going to be as big of a profit on the trade, but it's a hell of a lot more reliable than trying to pick tops and bottoms, right? Because when you pick tops and bottoms, you're just basically standing in front of a freight train, right? And sometimes it works, sometimes it doesn't, right? Much higher probability. So that's the general idea here on it, right? So buy low, sell high, and focus on failures. Now, in this particular range, we have this bullish bias to it, right? So, for example, when the market goes above the range, we have to let the buyers try once and twice before we sell back down, right? Because, of course, we're going against the momentum of the market, and these are called nested failure patterns. Now, that nested failure coming off that measured move we talked about in last night's newsletter, look what happened on this. Because it's pretty obvious to see the buyers failed, right? The buyers, and then the sellers got a beautiful setup there, right? Buyers try once, buyers try twice, little trap high, right? Off the high. They're gorgeous. Call it a crown reversal, call it a nested failure, whatever you want to call it. Beautiful short off the high coming right at, yeah, you guessed it, resistance above the range. Well, see what happens is if you measure the amount of the move above the range, remember, ranges are balanced, right? Ranges are balanced. And so those ranges, we can measure the amount above and project it to the amount below. Now, this is where the big clue comes in, right? Because the big clue you'll see, we did not take out that pendulum swing today, did we? No, not even close, really. In fact, all they did was just trap below that low by a tick or two there and rocket this thing back higher. So it's a very bullish clue, and ultimately what should have happened didn't happen, right? We did not get that full range rotation or pendulum rotation. You could also say grab that triangle, right? And we failed the triangle rotation. So whether you want to call it a failed triangle or a failed pendulum, a failure for the bears is by default a very good sign, right, for those bulls. So we're bullish into a range. Failed rotation off the high is very bullish. And of course, because of that, we want to be looking for the short off the high, but it's obvious to see here the bulls have a lot of the edge here right now. So the big thing right now is I don't want to buy high up here. Right? We don't want to get in the habit of buying high. How do we buy it up here? How do we sell it up here? Now, remember, we talked about this level last night, 51.22. 51.22. That is the big, it's the top of the big gap down. If you were to open up a 4-hour chart or a daily chart, when the market took a tumble back in March, right, when the whole pandemic began, it basically went from 51.22, I think, down to like 47, right? There was this huge gap on the chart. The top of that gap is at 51.22. You can easily consider that to be major resistance. And of course, if they can hold above it, it would become support. But for right now, though, it is considered major resistance. So you've really got a lot of great resistance areas overhead, the measured move, the range expansion, and of course, that 51.22. Now, range, of course, acts as a magnet. Right? That range acts as a magnet. So what goes up will likely end up coming back down. The challenge we have, though, is we're very bullish. So what I'd like to see us get one of those crown reversal patterns again, right? Speak of the devil, right? That crown reversal pattern we talk about on the S&P is pretty much what I want to see here going forward. So if we can get up around these highs, I'd like to see if these buyers can retest the highs. That'd be ideal. Get the buyers trying once, get the buyers trying twice, and the ideal setup here is that trap, right, off the high. Now, keep in mind, there are some variations of this setup. For example, sometimes what'll happen is the market will kind of go sideways here, and you can draw a trend line there, right? And you can find kind of these little hidden channels here. Those are scenarios where we may not need that trap high, right, tomorrow morning. So we'll be looking for that, but it's the same idea, right? The buyers have to give it a couple shots, right, on that pullback. Just like earlier in the session today, buyers try once, buyers try twice, right? Just like that nested failure or crown reversal, we're looking for that same thing to short back down again. And honestly, it doesn't change if the market goes higher, right? If the market pushes up into this 51.22 area, yes, we are definitely bullish, but this is not a breakout. What would a breakout look like? A breakout would be they've got to hold that pullback. Right? We see a pop up, they don't hold the pullback back into the range. We see a pop up, they don't hold the pullback and back into the range. They would have to pop this thing up. They'd have to hold that, hold that pullback and go, right? If the buyers could hold a pullback, which they did not do yet, right? There's no proof yet these buyers can hold it. So until they can hold that pullback with, what do we call it again? We call it a 1, 2, 3 reversal. Until they can hold that pullback, there's nothing I can do to get long up there. Again, risk-reward ratio is horrible. So instead of trying to buy into that pullback, I'm going to wait for those 1. We'll wait for those 2. Can I get that trap off the high for the crown reversal, right? That would be ideal, right? Sometimes what happens is the market will go up and it will quickly slam right back down like that, right? It'll quickly go right back lower. When you get situations like that, what you're looking for is the entry to be above the high, right? With that trap high, that is ideal. But oftentimes what I'll do on these is as the market pokes higher here, let's say it does something like this, right, where it runs lower. What I'll do is I'll grab that low, I'll move that one up. See what I'm doing? All I'm doing is I'm trying to find a level of resistance to get short. I'm still trying to use that same technique, right? I'm still trying to let the buyers try twice, but I'm trying to find, right, some way to get in off a resistance level. That's the key. We just don't want to sell in the middle of nowhere. I'll tell you right now, the minute I made a rule in my trading plan, and I give a copy of my trading plan to all of our clients, obviously, that join me in the trade room every morning. But once I made that rule, I've always got to sell at resistance or always have to buy at support. It keeps you out of a lot of the unneeded losses that really drain your account. So that's a good example of some variations of that short, right, coming off of that high. And again, I keep repeating myself here, you can get a much deeper dive. You'll see a lot more examples of all of these patterns, right, what they really look like in that free course that I mentioned, right, linked up in the upper right-hand corner. So you definitely want to grab that as well. So if the market can hold the pullback, right, if they can get up, if they can hold that pullback, that would be a great time for that 1, 2, 3 break higher, right? So that's where I can easily grab that high, I can grab that low, and then I can buy that pullback, right? I definitely don't want to buy the first one, right, for obvious reasons, right? I don't want to buy the first one. The first one's not going to be, again, not a very good risk-reward position, not a very reliable trade up there, much more reliable. And I know it's not fun to watch it go without you, but welcome to life, right? Welcome to day trading. We have to be patient and pick our spots wisely, like a sniper, right? Not like a bazooka. We're not firing a cannon, right? We're using a sniper here, if I can use some, metaphor like that, right? So again, 1, 2, 3 breakout, and then I can look for that breakout pullback off the low of that new hidden channel. But again, be very careful though. Be very careful trying to buy off of these highs. Now, there's also a strong move down, right? So what are some options if this thing falls apart? If it falls apart, what my favorite entry pattern would be, because remember, there's still a bullseye down here to retest that low and take out that 49.18 pendulum swing. Let's say, for example, the market collapses lower here. We get a shallow pullback, right? A lower low in price. That'd be a great spot for what we call a 2-try trap pattern, right? As we go lower. If the market really takes off, right, to the downside, if we really see that move lower, that pull back to the moving average, and that jump off the EMA, now that is that 1, 2, 3 reversal. And remember, the bears haven't had any luck yet with holding anything. So if they can hold that, I can now mark up that low to low, find that high, right? Find the hidden channel high and get short off of that high. Yes, it will be at an area of support, but all of that momentum will act as a steamroller, right? It'll bulldoze its way through. Where would those bears be trying to go to? They're trying to go down to that 48, right? That range from over the holiday, right? That holiday range there, 48, 28, 48 even, right? So keep that in mind as we go lower. If for some reason, too, we get stuck in the mud here and then we run lower here, can I buy down here? You can, because there's a range, right? But what's the problem going to be? Momentum. Right? Momentum is going to be very strong going lower here. So what type of entry pattern would I want to use down here? It would be a failure setup because we're trying to buy into seller stop losses to fuel the move back higher. But what we're going to do, though, is let the bears try twice, right? Let them try once, let them try twice, get a trend line coming off that low, right, to get long, right? Remember, though, respect the bear momentum. We can buy low here, but we just got to make sure we do it in a safe way with the proper variation of that failure pattern, right? We go into the range, we spit out the other end, right? Bears try once, bears try twice, right? There's those traps, you know what I'm saying, right? So we get some options here to buy off of that low. We'll have to really pay attention, though, once we get down there to see how strong that momentum is. And again, if they can hold that pullback, right, and jump off the moving average, that's a very different scenario. That is a bear market at that point, and I want to get short off that high. I'm talking about we go into the range for a while, we spit lower here. This is still a range-bound market at that point, and now we'll go with the 1, the 2. Can we get a trap, right? Can we get a trend line? buy off that support level going back up into that range. And remember, this situation happens a lot across all the different markets, range-bound markets, momentum swings. So this is for oil for tomorrow, but you can easily apply that strategy to really any liquid market. How about some gold? Let's wrap things up here, right, with the gold here tonight. And of course, we'll look forward to doing more of this stuff tomorrow morning in our trade room. What's the biggest takeaway right now on the gold? Well, I think it's pretty easy to see. It's a bear market, right? So a strong bear move down. We saw one big leg go lower. We saw two big legs go lower. Boy, I told you guys on Monday, weekend gaps usually get filled before Wednesday's close, right? I guess I got to step my game up a little bit there. I guess I was wrong, right? We missed it by a few ticks. I saw them go right to the weekend gap, and I'm thinking, oh, this is going to be great. They'll take the weekend gap out, finish off that move. But as you can see, though, they didn't fill the gap. So like I mentioned on Monday, Monday we saw that gap from last weekend. You can see, though, that is pretty typical, right? We usually do end up getting those weekend gaps filled before the end of the day on Wednesday. And it wasn't finished, right? Close only counts in horseshoes and hand grenades. So we still have the weekend gap open. But what the biggest clue here right now is look what's happened. The market goes two legs down and it pulls back above the measured move. Okay, that's why I said in the introduction, this overshoot is probably the most important clue that we see. Here's what happens. Whenever we have a measured move like this, remember, trending markets love channels and measured moves. We talk about that throughout our video course. But if I have a measured move down here and I get the market going 1, right, 2, and sometimes what happens is they kind of overdo it. And it was probably because of that gap. That's probably what it was for. It was that gap there. Everyone's beating their chest, right? Trying to get short, trying to fill that gap. Well, they missed the gap and they pulled back now above the measured move. So here's the problem. The risk-reward ratio on this is really difficult because when I want to sell short now, my objective or my target is to go back to retest that low. We have a lot of great momentum for the bears, but there's one big problem now. We've got a big support level right in our way. So if I try to get short here now, there's no clear line of sight, right? There's no wide open space for me to get short. And so this basically puts us in a situation where we oftentimes will see bears come down and they'll struggle and this thing will reverse. Right? These oftentimes do lead to reversals. The problem is, though, we have all of that momentum for the bears, so I simply can't buy it yet. The only way to sell it is I got to wait for what's the best pattern? What's the best entry setup? You'll know this if you watch these videos every evening. What's the best setup, though, whenever I'm concerned about selling into support? Traps, right? Traps, baby. Let them try once. Let them try twice. It's the only way to get a trap, right? I need some sort of trap entry to give me that small amount of risk, right? That nice bigger amount of reward because I can't bank on that retest the low. So these overshoots, these measured move overshoots, they're really, really powerful clues. They do oftentimes result in a reversal, so I do want to be ready for that here tomorrow. But I'll tell you though, we are at a great spot. Got a prior swing low, got a little trap right there. You can't see it very well there, but that's a little higher high right there. And usually those are prime, right? We mark up, let me get rid of these measured moves lines here real quickly so we're not getting too distracted here. But you'll notice, again, strong move down, right? We go through the measured move. We overshoot, try to get the weekend gap. We poke higher now. If I want to get short now, I have to wait for that. I get a trap, right? I have to find some way to sell as high as I can, right? Because again, I don't have a guaranteed easy line down to retest that low. So that's definitely one of the, that would be the ideal kind of pattern to be looking for here as we go. We got a lot of great resistance here overhead. The top of that channel looks beautiful, right? I mean, this is exactly what a 1, 2, 3 reversal pattern will set up like. Mark up that low, mark up that high. We're in a great spot for it, right? Next measured move down, should have no problem, right? Going back down to that big range we talked about, right, from last night's newsletter. And the only problem we have right now is I got to find a way to sell without selling into this measured move here too closely. Now, that brings me to my next point, that range we saw here for a while. What's a range? Ranges are magnets, right? Ranges also act as resistance in these situations, right? When the market runs down, we chop, 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 we push through. I could easily see for the bears not wanting to sell into that measured move. Isn't it easy to think these bears may wait for a higher price to get short? Absolutely, right? Absolutely it is. So those are the two scenarios we're ready for here. What I'd love to see is, I'd love to see us come down, give me one, give me two, right? With that trap high set up, right? To avoid selling into that measured move. If we do see a pop now up into that range, what's the problem now? Momentum is the problem. It's a great spot to get short. But you know what I always tell my clients, right? When you're dealing with like a 50, 60% pullback like that looks like it is, yes, it gives you a great risk-reward ratio, but the better your risk-reward ratio is, usually momentum is a problem. So what do we do in this situation? If I want to sell short here using the underbelly of this range, what's my concern? My concern are the buyers. So what we need is a reversal pattern. We need to get these buyers trying once, right? Trying twice, get that reversal to sell short. It's a very similar pattern, right? As we're looking for as we go lower. At the same time too, we'll look closely at this once we get there. A possible trend line coming up here may be useful as well, right? We go over and in, right? That trend line, we call these two-legged pullbacks, one leg, two leg, right? But really the bread and butter is going to be, can we get up? Can we get buyers try once? Buyers try twice? Might mark a trend line there, right? Hidden channel off the high. That will be a great short, right? I don't need that trap high. I just going to make sure I'm selling at resistance. And because of the depth of that pullback, I want to make sure the buyers try a few times before I can get short going back down. So a couple really nice setups we can see here if the market runs higher. I also know, you're probably also wondering, well, at what point do we buy this market? Well, we got to get a very strong push, right? Either we got to go up and then hold that pullback, right, and buy off the right. That's one option. Mark up that high, mark up that low, buying that low of that channel up to retest those highs. Or if we get that 1, 2, 3, and it really rips, whenever that happens and you get these really steep channels, usually it's best to go a little bit further out, right? Find that big low, find a wider channel, right? And then buy it from there. So if we do get that 1, 2, 3 reversal, I always like to look for that first pullback off the low of that channel, right? So again, if it does really rip higher here, we know those buyers are likely trying to make a run back up, right, to retest that high. One variable you also want to be ready for here is if we do end up sinking back down in and we start going sideways here. You know, that's a definite possibility. There's a bit of a range down there, right? So let's say we do get that 1, that 2, and that trap, and we end up kind of sitting down here now. What do we do in a range? In a range, we find areas of resistance. We wait for buyers to pop up, right? We wait for buyers to get in trouble buying those breakout pullbacks. And what do, right? We sell into those stop losses, right? So if it does go sideways, focus on failure patterns. And at the same time, if this thing just pukes and runs lower, strong move down, holds that pullback, and jumps off the moving average, what do we call those? We call those 1, 2, 3 breakdowns, or in this case, right, 1, 2, 3 breakthrough. Mark that low, mark that high. And again, as always, this might be near support, but if we can get that 1, 2, 3 move, that momentum will be enough to carry us for one more leg, right, running lower. That'll be a great spot there for us as we go lower. And again, you got that range acting as a magnet down below. We could easily see, though, these bears really keep this party going. So I do want to be ready for that 1, 2, 3 move down, find that low, find that high, right? Get short off of that high, right? And I'm sure there will be some other setups here tomorrow, and we'll fill in the blanks tomorrow morning in our trade room. But I really like this chart a lot here on the gold, that measured move overshoot, one of the classic things we see every day in our trade room. You know, speaking of trade room too, don't forget tomorrow morning, we're going to get together every morning for that matter, 8 o'clock Eastern time. It's very easy to get registered. I'll put all the info you need right in the description of this YouTube video. So grab the link in the description, get registered for tomorrow's trading session, join our free trading course, all the links you need in the description. Don't be afraid to call the office if you have any questions for me tonight. I would love to help walk you through the process of getting registered and join the trade room for tomorrow. We got live chat on the left, live chat on the right. At this point now, have a fantastic rest of your evening. Thank you so much for tuning in. Hope you had a great hump day. We'll see you guys tomorrow morning at the opening bell. If not, come back and see us again next time, back tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other. And, of course, be here tomorrow. Adios, amigos. Bye for now.